Welcome to India Business Insights. We are back with the latest edition of our update on the Indian economy series. Stay tuned, watch till the end, and leave your thoughts down in the comments section. So let's begin. Financial Stability Report by RBI. According to the recent Financial Stability Report by the Reserve Bank of India, the asset quality of the Indian banking system continues to improve. In March 2023, banks' gross non-performing assets reached a 10-year low of 3.9%. This positive trend was seen in both public and private sector banks across various sectors. The report suggests that this improvement is expected to continue, with stress tests indicating a further decline in bad loans to 3.6% by March 2024. However, this macroeconomic environment could impact this trend. Banks have maintained profitability with growing net interest margins, a high provisioning coverage ratio, and a healthy capital position. The capital to risk-weighted assets ratio indicates that banks are well capitalized and able to withstand macroeconomic shocks. However, there are concerns in the retail loan category. Although NPAs are low, loans categorized as special mention accounts with the overdue principal, interest or other payments were high at 7.4%. Public sector banks showed even higher figures in secured and unsecured loans, accounting for almost a tenth of their retail portfolio. Education loans and credit card receivables also experienced high delinquency rates. The proportion of unsecured retail loans has also increased. Therefore, close monitoring of the retail loan category is necessary. Monetary policy. In May 2023, the annual inflation rate in India dropped to 4.25%, reaching its lowest level since April 2021. The decrease brings the inflation rate closer to the Reserve Bank of India's target of 4% and alleviates concerns about the central bank's potential tightening measures. Notably, consumer food inflation declined to 2.91%, largely influenced by deflation in oils and fats, vegetables and meat and fish. Additionally, inflation rates eased in sectors such as transport and communication, housing and fuel, as well as light. On a monthly basis, consumer prices maintained a steady increase of 0.51% compared to the previous month. The softening of crude price to around $69 to 72 range in the past 3 months and the stable exchange rate has also kept the inflation in check. Index of Industrial Production. In April 2023, industrial production in India experienced a year-on-year growth of 4.2%, showing an acceleration compared to the revised 1.7% increase in the previous month. This growth exceeded market expectations of 1.8%. The manufacturing sector witnessed a significant surge of 4.9%, following an unremarkable 0.5% increase in March. Mining activities in particular rose by 5.1%, while electricity generation declined by 1.1%. Pharma, computer, electronics, other manufacturing, other non-metallic minerals, and food products sectors grew considerably. However, the furniture and beverages sector witnessed a decline. Purchasing Managers Index. Manufacturing PMI indicated a slight moderation in manufacturing growth, with the index declining from 58.7 in May to 57.8. A PMI reading above 50 indicates expansion, and June marked the 24th consecutive month of expansion for Indian factories. New orders continued to grow at a fast pace, leading firms to increase production at one of the fastest rates in 18 months. To meet the rising demand, businesses hired additional workers, although the pace of hiring remained at a moderate level similar to May. Forex reserves. India's foreign exchange reserves recorded a decrease of $2.9 billion, reaching a total of $593.2 billion as of June 23. The largest component of the forex reserves, foreign currency assets, experienced a decline of $2.21 billion, settling at $525.4 billion. Gold reserves in India also saw a decrease of $745 million, resulting in a total of $44.3 billion. On the other hand, special drawing rights, or SDRs, increased by $85 million, reaching around $18.33 billion. The recent decline in forex reserves can be attributed to the Reserve Bank of India's intervention in the forex market, aiming to protect the depreciating rupee against the strengthening US dollar. Employment. The unemployment rate in India for individuals aged 15 years and above decreased to 7.7% in May 2023, down from 8.5% in the previous month. The decline in the unemployment rate was primarily driven by a decrease in labor participation, indicating a decrease in the number of people actively seeking employment. The decline in labor participation was more significant in rural areas compared to urban areas. The urban labor force decreased from around 147 million in April to 142.5 million in May. Similarly, the rural labor force decreased from 306.5 million to 299.4 million during the same period. GST. According to the Ministry of Finance, India's gross GST revenue collection in June was Rs 1,61,497 crore, showing a 12% increase compared to the previous year. This marks the 15th consecutive month that monthly GST revenue has exceeded Rs 1.4 lakh crore. Additionally, this is the fourth time since the introduction of GST in India that the gross revenue has surpassed the Rs 1.6 lakh crore milestone. Out of the total gross GST revenue collected in June, CGST amounted to Rs 31,013 crore. SGST stood at Rs 38,292 crore. IGST reached around Rs 80,292 crore, which includes Rs 39,035 crore collected on the import of goods. And cess amounted to Rs 11,900 crore, including Rs 1,028 crore collected on import of goods. Import-exports. India witnessed a decline in exports by 10.3% to $34.98 billion, while imports fell by 6.6% to $57.1 billion, as per the data released by the Ministry of Commerce for May 2023. This marks the fourth consecutive month of contraction in exports, following a 12.7% decline in April, primarily due to the global slowdown in demand. The widening trade gap reflects the challenges faced by the economy as it strives to recover from the impact of the pandemic and cope with higher borrowing costs. This situation poses a risk to the nation's current account deficit, which can impact investor sentiment and diminish the appeal of the local currency. The services sector is providing some relief at the moment, with services exports amounting to $25.30 billion and imports at $13.53 billion in May. India's services exports are experiencing a significant surge, driven by a notable increase in information technology and business-related services. Fiscal deficit. According to government data released for May 2023, India's fiscal deficit for the first 2 months of the current fiscal year until May stood at Rs 2.10 lakh crore, which is equivalent to 11.8% of the annual estimates. Compared to the same period last year, the fiscal deficit has narrowed from 12.3%. Total receipts amounted to Rs 4.16 lakh crore, while overall expenditure from April to May reached Rs 6.26 lakh crore. These figures represent 15.3% and 13.9% of this fiscal year's budget target, respectively. Revenue receipts stood at Rs 4.13 lakh crore, with tax revenue amounting to Rs 2.78 lakh crore and non-tax revenue reaching Rs 1.35 lakh crore. Tax and non-tax revenues accounted for 11.9% and 44.6% of the budgeted estimate, respectively. While tax revenue contracted from the year earlier period 15.9%, non-tax revenues significantly expanded from 18.3%. The surge in non-tax revenue was due to the Reserve Bank of India approving the transfer of Rs 87,416 crore as a surplus to the central government. Data indicates that the revenue deficit stood at Rs 45,489 crore, of 5.2% of the fiscal year's budget target. High performance indicators. High performance indicators such as domestic air passenger traffic, vehicle sales and UPI transactions are key indicators for assessing private consumption, which is the major contributor to the total GDP. Domestic airlines carry 13.2 million passengers in May 2023 compared to 12.89 million passengers in April 2023. Meanwhile, passenger vehicle sales increased by 14.9% year-on-year to 288,369 units sold in May 2023. UPI transactions increased in volume to 14,89,145.50 crores in May 2023 from 14,07,007.55 crores in April 2023. Thus, growth and stability in high-frequency indicators indicate a positive trend for increasing private consumption in India. In conclusion, the recent reports and indicators suggest positive trends in the Indian economy. The asset quality of the banking system continues to improve, with a decline in non-performing assets. Stable inflation rates and increased industrial production indicate a favorable monetary policy environment and a boost to manufacturing activities. The decline in unemployment rates coupled with increased GST revenue collection highlights positive developments in the labor market and tax revenue generation. However, the consecutive decline in exports poses challenges, reflecting the global demand slowdown and impacting the trade gap. Despite these challenges, high-frequency indicators such as domestic air passenger traffic, vehicle sales and UPI transactions indicate a positive trend in private consumption, which is crucial for overall economic growth. Overall, these developments indicate a positive outlook for the Indian economy in the foreseeable future. However, continued monitoring and proactive measures are necessary to sustain and strengthen the positive trends observed, ensuring a steady path towards economic recovery and growth. Thank you for watching this video. Please like, share and subscribe to our channel for more such content. Also, do press the notification bell to stay updated.